Okay guys, going to be helping Steve in the Discord and kind of explain a little bit about position size and how I approach it. Roll the intro, let's chat. And a warm welcome to one and all. Well, position sizes is something that a lot of people struggle with and get wrong. Now, one of the problems with position size is, how do I put this without getting on my high horse? I do get on my high horse a lot, and I'll kind of explain why I do that first. I want to have a coffee because I'm not in the best of moods.
Oh, here we go.
No. Oh, God, we all know Scruffy likes a coffee. The reason I'm not in the best of moods is I get pulled apart all the time because this industry is incredibly decisive. Oh, you've got to do 1% of your account. You've got to do 0.5% of your account. Well, if you've got a small account, that means nothing. If you've got 100 quid, that's all you've got, £100. How the hell can you trade with 1%? You can't. You've got no chance. So this also applies as your account grows. Now, don't get me wrong. When you have a decent amount of money, say, and I'm talking 5,000, 10,000 plus, your percentages do come into it because now the percentages are meaningful. But when you've got a small account, percentages mean nothing, zero. Common sense should prevail all the time. Now, if I flick this over, you'll kind of get to understand where I'm coming from. This is the Discord for the Scruffy Squad, and if you want to come along, do sort of come into it, and you'll find the links for it down in the description.
You know, you're a classic example of the inverse ratio between the size of the mouth and the size of the brain.
Put my teeth. I need another coffee. Description, and it's a good bunch. And I'm here every day and I'm constantly helping. If they want me to break a chart down for them, I'll break the chart down for them. I'll give them my opinion. It's not signals, it's hand holding. There is a difference. But I'll tell you what I'm doing before I do it. Or if you're doing it, I'll tell you how I would approach it. And this all raises a lot of questions because I do things a lot different to most people. Why? Because I don't fall for the bullshit that you lot fall for. It was my job in industry. It's how I made my living. And now it's my only living on my own. I don't have the company anymore. I work for myself. Brilliant. And the question is, just a quick question on position size. Watching module 3, what he's referring to at that point is wear the scruff. Now, in order to help the guys understand, this is not for sale, by the way, and it's not for public use, and if I ever saw it in the public, I'd get it shut down. This is exactly how I trade and why I trade and how I do all my homework. And in module 3, which is what he's looking for, bloody hell, got to go back some, haven't I? There's 51 modules here, and I add to them all the time. Position size. Okay, so let's go back to the help hub. It says for every 500 to position size of 50p, is this price per point and not overall risk of the trade? I've never been good at this because I've always used fixed percentage. Okay, it's not to do with risk. There's another section in there about risk profiling. Now I do what's called a risk profile, where it's an allowance for each day based on a weekly allowance. Okay, now it's quite a simple process to do, but it controls your money because that's how I deal. I deal in money. So when I get all the questions about, where do you stop? What's the percentage risk? I don't give a shit, mate. And most of the people that are sort of banging on about that haven't got a clue what they're doing anyway. It's because they're full of this garbage. No, a risk profile is what the account is allowed to take for a week. It's broken down into trading days, broken down into per trade. and it gives you a monetary value. Now that monetary value is what you use to accumulate profit. Now your profit can be 1-on-1, it can be 2-to-1, sometimes it can be 1/2-to-1. If you're scalping, you are inversed. But what it does is it gives you sort of frameworks to work to. Okay, and that's what a risk profile is all about. Now, I adhere to one and I follow it all the time, and it's based in money. Always remember that when you're looking at my trades. I couldn't give a toss about where I put my stop. I don't care what the percentage is against the account. The stop goes where the stop has to be. That simple. It's based on 2 barriers, one mental, one physical. And it'll be put in, and it's based on my last point of entry and then an expansion point. And then I'll ask another question, can I afford it? And if I can't afford it because it's outside of the risk profile, I have to reduce the position size. But the position size starts with a criteria as well. And that is, it's £1 for every 1,000 liquid money I have. Now, in the prop world, everybody sort of bangs on. I've got a 300,000 account. I've got a 500,000 account. No, you don't. And I know this because I never talk about my prop account. It's massive, right? But the drawdown is tiny. So it's only a small account. Pays me 1,000, 1,200 a month. I'm happy with that. You know, I'm not in it to sort of have big swingers and one thing another and sort of, oh, look at me, look how much I've made. I don't care. As long as I can go on holiday, I'm not bothered, right? Because I base everything on its drawdown. Now, on the physical accounts, sort of my own personal funds, it's based on what the account size is then. So there's 2 different sides to that coin. When you're in the prop world, you look at the drawdown, that's the account. If it's your own funds, the account is the account. And it works out at £1 for every 1,000. So if you've only got £1,000 account, the biggest position size you can have, biggest, is £1. So if you're staging up, you can't go into market on 100% because you're already fully maxed out. You would have to go in at 20 pence, 25, 50, 10, whatever, and build up to £1. Now the example given there was 500 quid. So your maximum position size is 50 pence. That's as big as the size you can put on. Because if you go higher than that, what you're going to do is you're going to start stressing the account. And the moment you start stressing the account, it's your road to ruin. So you've got to apply a risk profile, understand what your daily limits are, how much the stop is going to cost you, and if it goes beyond that daily limit based on your position size, then the trade is wrong. Many ways to look at this, and this is where trading falls down, because everybody thinks, follow my system, you'll make a gazillion. No, there's no system in the world that'll make you a gazillion. They'll make the maker a gazillion that's selling it. But I don't sell anything, so I don't give a shit. So I'll tell you they're fucking morons, because they are. The easiest way to spot them, as soon as they're driving a flash car or they're sitting there with loads of money around them, walk away. Run a mile. You know, as soon as they say, follow my course, you will go and make a fortune and you'll give your job up in 90 days, run a mile. You want to trade, do it properly. If you've got a small amount, you're going to get small returns. And your first order of the day is beat the bank. That's it. It's all I do. I look to beat the bank. You know, at the moment, you can, savings accounts are anywhere from 3 to 5%, depending on what you got. And that's at the upper end, the real upper end. So as long as I do more than 5% a year, I'm making my money work for me. And that's the first benchmark. So if you're not doing 5% a year, then what's the point? And really, you should be looking to be doubling and quadrupling what the bank are doing. Why? To offset your losses. And it all comes back to risk profile and how you approach yourself to the market. And the first place you approach yourself is your position size. If you know what your cap is, at least you've got room to work without destroying your account. Hope that helps. Be interested in what you see in the comments. Disagree, fine, disagree. You know, but I'm just telling you this from 2 decades of experience and somebody who actually does it for a living. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.